Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode we're joined by two special guests, and they are Dr Subodh Kulkarni, CEO of Rigetti Computing, and Dr Simon Plant, Deputy Director for Innovation at the UK's National Quantum Computing Centre. Gentlemen, thank you so much for joining me today. Just to get started, would you like to quickly let us know a bit more about yourselves and your careers? Then maybe Subodh, we can start with you and then Simon.
Well, thank you for having us. So quick background, I'm Subodh. I'm currently the CEO of Rigetti Computing. As you mentioned, Rigetti itself is a publicly traded company based in Berkeley, California, which is where I am right now. We are traded on the NASDAQ exchange under RGTI. So it's a 160 people company in developing quantum computers. We develop superconducting quantum computers. I'm sure we'll get a lot more into quantum computing and Rigetti. And a little bit about myself. I grew up in India, did my undergraduate at IIT Bombay, and then came to the US for graduate studies. I did my master's and PhD in semiconductors at MIT. And then I have been in and around semiconductors for 3 decades, starting with IBM and then with 3M and then with semi-cap companies. And I became the CEO for Rigetti a little more than 3 years ago.
Yeah, so great to be able to join you this afternoon. Simon Plant, Deputy Director for Innovation and part of the senior leadership team of the National Quantum Computing Centre. So the NQCC is the UK's national lab for quantum computing. So we work across industry, the research community, and also with government to help to accelerate both the development of quantum computing and also its adoption. And we really do this by focusing on enabling readiness. So looking at technology readiness for quantum computing, but also infrastructure readiness. So how can we put in place the infrastructure in which to build, operate, and host quantum computers? And at the same time, we focus on something called quantum readiness, which is how we work with different parts of the UK economy, different actors in the UK economy, in order to understand benefits and opportunities related to quantum computing, broadly speaking. And hopefully we'll have an opportunity to dip into those topics as we progress through the podcast. So in terms of my background, I'm a physicist by background. I did my PhD back in the day at the University of Oxford on something called molecular-based architectures for quantum information processing. Since then, I've done various roles in quantum technologies and as part of the National Quantum Technologies Programme here in the UK. I spent some time on the innovation side, looking at innovation, funding and connecting what we were seeing on the ground in terms of the development of quantum technologies into a strategy for commercialization for the UK prior to joining the NQCC. And I've been with the NQCC as part of the leadership team for the last 6 years.
Excellent. Sounds great. And again, it's great to have you both here. And thanks so much for taking the time out to speak with us today. So on the show this week, as you may have deducted from our guests there, we'll be diving into the fascinating world of quantum computing and its transformative potential for financial services. In particular, we'll explore the current state of play for quantum solutions in finance and how financial services are embracing the technology, with a specific look at some of the work Rigetti is doing with its partners in the sector. We'll share advice for banks and fintechs looking to innovate with the technology and prepare for the quantum revolution, including best practices for integrating quantum computing into your existing systems. And we'll also take a closer look at the UK's innovation strategy for quantum technologies, the technology's intersection with generative AI, and the potential future impact of quantum computing in finance, including, of course, the looming challenge of Qday. So to start off then, we're hearing a lot about quantum computing at the moment, very much in vogue, it seems. So where are we in terms of its development right now? Subodh, maybe we can start with you for that one.
Sure. So quantum computing is an exciting technology with significant potential. At the same time, we are still very much in R&D stages of quantum computing. I don't believe any one of us can say that we are really ready to deploy quantum computing in data centers to do real life practical work or applications. So we have the potential, and that's the excitement. We can see that in a few years, we will be significantly better in computing capability at a fractional energy consumption, both at the same time. And that's what the excitement is all about. But we are still perfecting the technology. Our timeline, and we are on the more conservative side compared to some other pure play quantum computing companies, is that we are about 3 to 4 years from what we call demonstrating practical benefits with quantum computing over classical computing in terms of performance or cost. We call it quantum advantage, and we have quantified it as to, it gets into nitty-gritties of how many qubits and what kind of fidelities and what kind of gate speeds. But we have quantified what we need to do to get to that. Obviously, collectively, we will all do everything we can to get there as fast as possible. But these are complex technologies, extremely challenging problems. So it is going to take us a while. So as I mentioned, we are thinking about 3 to 4 years, maybe a couple of years if everything works out perfectly, but it could be 5 or 6 years if things don't work out. And in complex technologies, you have to be ready for that kind of uncertainty. So that's the timeline we are talking about roughly before quantum computing enters data center in a practical way.
Yeah, so I'd echo some of the comments that Subodh made in the sense that quantum computing is an emerging technology. And I still regard quantum computing as being in its infancy, but we also have to acknowledge that things are developing really quickly. So billions of pounds or dollars of investment globally in quantum computing, but the potential is there. So McKinsey, for example, are projecting by 2035, economic value could reach $2 trillion globally. So it's really significant. And a market for quantum computing by 2035 of just shy of $100 billion. So it's really significant in terms of the potential. The other example I would give is that Oxford Economics produced a report last year, which was predicting for UK end-use sectors the potential for 30% and productivity improvements going out to 2045. So again, if those productivity improvements can be achieved in end-use sectors like financial services, like pharmaceuticals, and like healthcare, this has the potential to be truly game-changing. The question is, where are we today? We're at a more formative stage. And what we need is for the underpinning technology, the hardware in particular, to develop to a point where, as Subodh was saying, we can actually demonstrate practical advantage over conventional compute technologies. But that's not to say quantum computing is going to replace conventional compute technologies. What we have to achieve is integration with existing digital compute technologies and infrastructure, and allow quantum computing to play its role in terms of augmenting capability. But we're on a journey towards that. The other thing I would say is that the UK government published a set of mission statements, so 5 mission statements, the first of which relates to quantum computing, setting out the level of ambition and capability that the UK would seek to have by 2035. Now, that prescribes a teraquant capability. What does that mean? It means 1 trillion quantum operations, a quantum compute capability that can perform 1 trillion operations error-free. What does that mean in practice? Well, it means that we're on the pathway towards general purpose quantum computing. And as we go down that roadmap, we're expecting the application space for quantum computing really to start unlocking. So that really sets out, that target by 2035 sets out the level of ambition, or the UK's ambition, for quantum computing, which tracks with industry roadmaps. So that's a really useful target to have. But we have to think about the steps along the journey towards that level of capability that we need to achieve and realize with the underpinning technology.
Sounds great. So I guess looking at financial services in particular then, what's the current state of play with quantum computing there? What use cases are currently being looked into? And Subodh, you mentioned there are hopefully 3 to 4 years, but how close are we to seeing quantum solutions being deployed at scale in financial services, would you say?
Well, the exciting thing about quantum computing, and Simon touched on it, is it's not just a computing technology to accelerate speed or reduce energy consumption. There are things that you can do with quantum computing that are inconceivable with classical computing. So you can really take on problems that are near impossible or impossible to tackle with classical computing. At the same time, we all realize, in the practical world, technologies coexist, and that's clearly our view is quantum computing is going to coexist with classical computing. So our view is that the future data centers, and we call them quantum data centers, will have quantum computers coexisting with classical computing, which obviously is CPU and GPU type technologies. So we call quantum computing QPU, quantum processing unit. So our view is that QPUs will coexist with CPUs and GPUs. And they're really designed for, they're optimized for different tasks. CPUs are really good for sequential computing like additions and subtractions. And there's really no reason to take that onto a quantum computer. And GPUs, as we all can see with Gen AI and what's going on, are really, really good for parallel computing. The part that we think QPUs are really suitable for is the simultaneous computing portion that currently is being handled by GPU. So that's the kind of problems where you have thousands of variables that are simultaneously interacting with each other that are incredibly difficult to parallelize with current GPU technologies. That's the part we believe quantum computers can take on. So effectively, it will be an accelerator to a GPU where simultaneous computing is needed. Now, having said that, financial industry is a prime industry, one of the main areas where you deal with simultaneous computing applications. Because typically, when you have forecasting involved, where you have probabilistic kind of calculations involved, quantum computers become very suitable for those kinds of calculations. And as you can imagine, financial industry always deals with lots of probabilistic questions and uncertainties. What is the market going to do today? What's the interest rate going to do next year? What is the chance of a recession happening in a couple of years? I mean, those are the problems that financial industry has to tackle day in and day out. And those kinds of problems where you are literally hundreds, if not thousands of variables that are continuously interacting with each other, very difficult to model it with classical computers. And people have tried, obviously. There are organizations we deal with, and you asked about examples, like we deal with organizations like Moody's and HSBC and Standard Chartered and ADIA and so on in the financial world. And they are continuously asking those questions. Moody's job is fundamentally to give the central banks of different countries guidances on what may happen to economic growth and recession. So predicting recession is a big deal. And classical computing, the current data with all their models and everything is at 68%, which is just not good enough in accuracy. So how can we improve that 68% to 99% if possible? I mean, and we are showing some examples with quantum computing, even in the primitive state, even in the R&D situation we are in right now. You can bump up that 68% of economic recession prediction to like mid-70s right now. Not good enough, but that's a huge jump, and it shows the potential. Once we get to the real capable quantum computing, we could take it to the 80s and 90s, hopefully. So those are the exciting kind of applications we see coming from the financial services. There are other industries too, like pharma, encryption, and so on. But since you specifically asked about financial industry, I think that may be one of the main vertical markets which could take advantage of quantum computing sooner rather than later.
So I think for me, quantum computing in part is about bringing complex computational problems back down to the human scale. What do I mean by that? So in a sense, as Subodh was alluding to, there are certain complex computational problems that we have today that even current supercomputers can't address. So there are complex problems that effectively we can't address within the lifetime of the universe. Maybe we could address them in 10,000 years, maybe a year. There's an opportunity here with quantum computing to really speed up certain tasks and certain computations where effectively we're bringing that back to the human scale where we get results, potentially more accurate results, more quickly. So that's the big opportunity here. But in a sense, it's also task specific. So we have to look at what quantum computing can do really well that goes beyond conventional compute technologies. And things like spotting trends in data, spotting anomalies in data, looking at correlations in sparse data sets. So we expect quantum computing to be good at these kind of tasks. And the types of challenges or opportunities that we see in financial service lend themselves to quantum computing very well indeed. And I think that's why some of the banks, some of the financial services firms are looking at quantum computing right now. But as Subodh was saying, this is very much as part of an R&D endeavor. But I think increasingly, my sense is financial services looks at this as a strategic opportunity. We at the NQCC certainly think there's early mover advantage here in terms of being able to generate early intellectual property in order to understand what skills are needed, in order to prepare organizations in a structural sense, and in order to chart the course on both R&D where that's relevant, but also on procurement roadmaps as well. I see transitions going from proof of concept stage now to co-development of use cases where financial services firms may be working with quantum compute providers. And I think there are early indications in terms of quantum-inspired solutions being scalable. And I think that indicates the potential for the future in particular.
Excellent. Sounds great. Subodh, you mentioned there you've been working with Moody's, HSBC, and Standard Chartered. Can you share some more details for those partnerships and the areas you've been looking into with them?
Absolutely. So many of our partnerships have led to some excellent papers and publications that anyone can access. And we try to do that because in R&D, you want to get the world to see what we are doing and what can be done, because we all learn from each other. So it's a time where we have to collaborate to grow the ecosystem. So our view is that we should be doing more R&D, and we should encourage other companies and academic institutions to do that and share our results, because it collectively helps the whole community. So regarding Moody's, and as I mentioned, our work has focused on predicting economic recessions and whether quantum computing can help improve the accuracy of economic recession prediction. And definitely the early results are quite promising. We are continuing to work with them with the large data sets they have and see whether, as I mentioned, can they improve the 68% accuracy with classical computing to something more than 90%. We are not there yet, but definitely those signatures are there that we can go there. As Simon mentioned, we are already using quantum-inspired solutions. So we are still using sometimes classical computers, but understand how quantum computers work and take some of those concepts into classical computing, and even that shows a promise. And certainly when we bring quantum computers, we definitely see a pump up from quantum-inspired solutions. With HSBC, we are looking at, and Simon mentioned that, a sparse data set. And these are like literally banks are doing billions of transactions every day, and one fraudulent transaction can be very penalizing. And how do you detect that one fraudulent transaction? Current machine learning algorithms that we use and classical computers we use are intrinsically trained to detect what happens majority of the time. So we have developed our machine learning and computing to fine-tune things that happen 99.9% or better times. We haven't trained our machines to look at that 0.1% or less likelihood. And that creates a real challenge. How do you train machines to look at that kind of a sparse signal in a very vacant data space, if you will? And quantum computers are excellent for that. And fundamentally, they're intrinsically random type devices. They do not need the kind of training classical computers do. Therefore, they don't have the biases that classical computers do. In a way, I think of it, and some people have compared and have done the analogy, quantum computers think like a human brain does. So when the machine is trying to predict something, you always look at what is likely to happen. When we as a human being are thinking about it, there's always this small chance in the back of our mind that something catastrophic may happen. And that part, we have not been able to capture that successfully with classical computing. And therein may lie the value of quantum computers, where you can pick that kind of a subtle signal. So those are the kinds of things we are doing with HSBC. With organizations like Standard Chartered, we are looking at data sets and looking at predictability of data sets. So can one data set simulate the learning from that, can it simulate other data sets? We are typically looking at stock market charts, given the history of the last 5 years. What is the likelihood of similar kind of prediction in the next 5 years or 10 years? So those kinds of data sets. And those are extremely difficult problems for classical computers to handle. The list goes on. So there are many kinds of tricky problems that the financial industry has tried to deal with classical computing. They realize the limitations. We are experimenting right now. We are just testing out with quantum computers whether the intrinsic new nature of computing that quantum computer enables, will it help financial industry? So far, all indications are it has the potential, but again, I'll caution, I don't believe any one of us has shown clear results saying, here's the full value of a quantum computer in financial industry. We are seeing the potential, we are seeing the value, but not quite the ROI, if you want to think of it that way.
Excellent. Sounds great. And I guess, obviously, you're working with huge financial organizations. What are the biggest technical challenges that those organizations face when it comes to implementing quantum computing into their existing tech stacks? And how have you approached that at Rigetti?
So Rigetti is a small startup company, effectively. We try to engage with our customers in a constructive manner. We have quantum physicists and algorithm developers on our side. But intrinsically, when we try to engage with any customer, we want to make sure that they have comparable talent on their side, because it's not a case where it's not like classical computing where you can plug in something and walk away and expect a customer to run it and understand what the results are. You would fundamentally design your algorithms differently in quantum computing. It's not a deterministic kind of computing. So even a simple 2 plus 3 is not a deterministic 5 answer. You get a probability distribution around 5. That's the way quantum computers work. They are by definition analog in nature. So you deal with analog input, analog output. So we do need people on the customer side who understand quantum computing. Thankfully, many large companies, including financial industry, understand the potential of quantum computing and have started investing in this area. So you look at the big banks like Moody's or HSBC or JP Morgan or Goldman Sachs, they have started hiring quantum physicists now and algorithm developers who understand quantum computing. And that ecosystem is critical for us to work with. So we are typically dealing with people who are domain knowledge experts on their side. They know the financial industry. We bring definitely more knowledge on the quantum computing side. They bring more knowledge on the financial side. But we definitely need a common language to talk with each other. And that's really where quantum physicists and algorithm developers come in. And as I said, thankfully, most large financial companies have started investing. So the interaction becomes very fruitful in nature.
Sounds great. Sounds exciting times ahead. And Simon, I'll come to you. I mean, you mentioned at the start of the show the UK's kind of approach to quantum computing there. I mean, what are some of the projects that you've been working on at NQCC?
So we work on across a range of different projects, and in a similar sense to what Subodh was articulating, we have in-house expertise, both quantum physicists and application developers who work on the algorithm side. And effectively what we do is work in the context of collaborative projects. And we do that across a range of different problem sets and also areas that are applicable to different sectors of the economy. But what I would say is we've also worked on projects related to financial service, and perhaps a couple of those spring to mind. So one of which was with Rigetti as the lead of the project, working with the Quantum Software Lab at the University of Edinburgh, and also working with HSBC. So that was looking at the application of a quantum-based machine learning approach for fraud detection. So looking at anomalies in data, being able to understand how those anomalies can be predicted, how can they be identified. But at the same time, the work that we were doing with the Quantum Software Lab looked at the pre-processing part. So how do we make that workflow more efficient in terms of training a machine learning model? So that's the actual component of the project that the Quantum Software Lab and ourselves were working on. We've also worked in a not too dissimilar project actually with Unisys and PaySafe, where Unisys were leading the project. And again, that was looking at fraud detection for credit card transactions. So again, applying a machine learning approach. And the challenges are quite interesting there. The challenges of working with what are called imbalanced data sets, where actually the fraudulent or the potential for fraudulent transactions is a very small part of the data set. So effectively, we're looking for a needle in a haystack amidst a raft of other data, other financial transactions. I think from those types of projects, we're seeing early promising results, but really they do pave the way forward. So we're taking very much a quantum inspired approach. But the question is, can models be scaled and made applicable to larger data sets? And again, I think the early indications are, yes, that can happen. But I think for truly transformative results, we're waiting for more performant quantum computers. But I think there's a lot that we can do in the meantime in terms of developing the models, in terms of developing algorithms, developing the methodologies that lead us on that pathway towards full practical use and return on investment at a later point. And in that regard, I just wanted to call out another sort of watershed announcement, I would call it, towards the end of last year, which was HSBC announcing an improvement for what they were doing in terms of algorithmic trading, taking a quantum-inspired approach. So they were announcing over a 30% improvement in algorithmic trading as a result of taking a quantum-inspired approach. And that was attributed to applying quantum to classical workflows and allowing observation of market signaling within data, within noisy data. So that's really interesting. And I think it's work like that and work that we undertook with Rigetti and others in the context of fraud detection, which I think will pave the way to the future. and gaining the full value from quantum computing as the technology continues to develop.
Excellent. And I guess you've touched on a few things there. We've touched on a few things earlier in the podcast as well of some of the work that's being done at the moment. What kind of impact, I guess, if we're looking ahead as well, could this technology have on financial services? What potential future use cases as well could there be as well? Maybe Simon, we can start with you for that one.
Yeah, so I see that potential in terms of fraud detection, I think in particular, partly because we worked in the context of a couple of projects related to fraud detection and looking at the scalability of models and also scaling to larger data sets as well. And I think there's real value in undertaking pilot studies at this point, which allow us to align partners, allow us to develop new methodologies, allow us to look at the application of quantum algorithms, but also allow us to understand what are the sources of relevant data sets to the particular application that we're working in. So I think fraud detection is a particular area that I expect we'll see more work on in the near term. I think the other one I've highlighted, following on from that announcement by HSBC at the end of last year, is with regard to algorithmic trading. I think where 30% plus improvements in algorithmic trading are being reported, that has really great potential. I think there's also potential in terms of quantum computing speeding up data analytics more broadly. So I think that's really interesting area to watch as well. And I think at the moment, there's another topic, which is a research topic on blind quantum computing, which speaks to privacy. So that's an idea where we can run a quantum computation remotely via a server, where we can't necessarily see the inputs or outputs, or indeed the quantum algorithm that's being run. Now, that's really interesting in terms of providing a model or a paradigm for a secure cloud compute service. So I think that's an interesting research topic as well. So I think there are several areas that potentially we can see in the near to medium term where there will be further work on the R&D side to develop this application space further.
I think Simon made some excellent points. Just to add on to a few, even if you take a look at what's going on right now in the world, literally, if you see what's going on in Iran and all the concerns with oil prices, this is literally the topic of the day today, right? What is going to happen to oil price next week and next month, and all the inputs that go into it and everything. And it's near impossible to predict, and that's why you see wild fluctuations and gyrations in stock market. And it is having real impact on human life, right? Decisions are being made that are impacting people and their lives and finances. And that's potential. I don't want to say quantum computer is going to solve all these problems. Maybe we'll create more problems and solve them. But let's at least be optimistic and say that there is a good chance we may be able to tackle on some of these extremely challenging problems and at least do a better job of predicting the outcomes. Right now, we can see the limitations of classical computing. The models are just not sophisticated enough. We just don't have enough computing capability. And the other area I would add on is, as exciting as quantum computing is from positive use cases, by that I mean improving something, there's also this real serious concern that quantum computing will be able to do decryption, and basically you can hack into the existing RSA or AES encryption that we all have become dependent on. So literally every one of our financial transactions is currently encrypted with some kind of an AES 128-bit or 256-bit encryption technology. And it's been shown various different ways that once quantum computers become capable, that becomes a very relatively easy one to hack into and break. Hopefully, we all collectively learn from previous mistakes and engage with post-quantum cryptography, PQCs, the whole area that is emerging, and we are there. But we have to be ready for a seriously negative use case of quantum computing. There's already $3 trillion of cryptocurrencies out there protected by a simple AES encryption key right now. And we can see what happens in the world. Even a simple thing in a museum gets a lot of attention from the nefarious elements in society. And if there's like a $3 trillion and growing price ticket out there, there's a very high chance that as many nefarious countries, for that matter, or rogue companies may try to go after that using quantum computers. So we have to be very cognizant of the destructive potential of quantum computing and how we want to make sure that we don't end up with that scenario before we get the positive use cases of quantum computing.
Yeah, and I did want to touch on that as well, actually. We've had a few articles go up on the FinTech Futures website on the topic of Qday, which, as you've mentioned there, is that anticipated moment when quantum computers become powerful enough to break the cryptographic systems that currently secure our communications and transactions. You've mentioned a few things there, but what do companies and also governments need to do to prepare for that and ensure they're not getting caught out? And what's being done on the post-quantum cryptography front at the moment?
Qday, is indeed a frightening scenario. Everyone has a slightly different vision of a Qday, but simply put, the feeling is that we wake up someday and we find there's no light, there's no electricity, no water, no forget bank accounts, brokerage accounts. And it's a very frightening scenario in the modern day to envision something like that. We see glimpses of it. I'm sure you have seen it in the UK, the US. We have seen a little bit of that when some electrical grid fails in some particular area, and how frightening that scenario becomes for those people. Now, tag on all the other things like no banks, no brokerages, and everything is lost. It's a really frightening scenario. Governments are indeed taking this situation very seriously. Certainly in the US, NSA, and various different initiatives. And I've seen that with NQCC and the UK government as well, and many other countries around the world fully understand the ramifications. And that's one of the reasons why many countries are investing aggressively in quantum computing to know exactly what the technology is capable of doing. PQC, post-quantum cryptography, is obviously a critical area to make sure a Qday doesn't happen, at least not in a bad kind of a way. In the US, NIST has released some standards already. So we know what the solution is and what potentially can be done. The challenge I see is a typical human lethargy and inertia. It's very easy to lull ourselves into thinking this is not going to happen. And why bother unless it's really going to happen? And in some ways, Y2K becomes a negative situation, right? Because there was no real damage done because of Y2K. There's a lot of people saying, really, Qday, I don't believe it's going to happen. And we have to be very careful we don't end up in that scenario. So my hope, and I certainly think many governments will do a lot of initiatives to bring on PQC. They're encouraging companies to get on the PQC bandwagon and make sure all the data is encrypted with quantum safe cryptography kind of algorithms. I just worry that sometimes we as human race tend to get caught up in the current times, and inertia becomes a negative enemy for every positive development. And if that happens, Qday does become likely, and it could be a catastrophic scenario. Hopefully we don't have to go there.
Hopefully not. Simon, do you have anything to add on to that?
Yeah, so I'd reflect on the fact that here in the UK, the National Cybersecurity Centre has published guidance for the preparedness and the flow through of PQC solutions. So effectively setting a deadline for 2035. So effectively over the next 10 years, the indication is that organizations should be acting both to plan and to implement the relevant cybersecurity solutions. Having said that, I think in a sense, we've known this is coming for a long time. So we've kind of had a 30-year pathway in terms of understanding, well, okay, if a certain algorithm that was developed 30 years ago is implemented efficiently on a quantum computer. So if a quantum computer is built with sufficient performance, then that it can run the algorithm efficiently, then it represents a risk to common encryption standards. So the encryption standards that are used today. We're still some way off from developing that level of capability, but nonetheless, the guidance is clear in terms of preparing for it. Now, I think it's expected that PQC solutions are flowed down to enterprise solutions and enterprise software. The challenge, as I understand it, is more the legacy technology at the tail end, for which it's more difficult potentially to implement cybersecurity patches and solutions that include PQC. But elsewhere, we might expect PQC solutions to flow down, and that's starting to happen already. And as Subodh was alluding to, over the past decade, NISC has been running an initiative to spur the development of relevant classical algorithms that are resistant to quantum attack. So preparations are being put in place. Clearly the industry, by which I mean the IT industry, is moving on this. But I think it's important that organizations look to guidance from national bodies, such as in the UK, the National Cybersecurity Centre, in terms of when they should take action and the levels of preparedness.
Having said all that, Simon, you will also agree that when I go to any meeting, trade show, conference, and have an opportunity with more than a few dozen companies in the audience, and you ask the question, how many of you are actually doing PQC? And the answer is less than 1%. So everyone has heard the words, and these are people who are attending a quantum computing talk, okay? So you can just imagine the whole world out there. Very few companies are still taking this issue seriously. So the good news, we have a little bit of time. It's not like it's going to happen in the next 5 years, but 5 years can go very fast in the scheme of things. So I hope companies and organizations take the whole government initiative seriously and start responding to that with more urgency.
Completely agree, Subodh. I think it's a case of organizations should act and follow the guidance. And that key deadline is there of 2035 from NCSC to have the solutions completely in place. So they should carefully think about the roadmaps towards that.
Excellent. Right. There's a key takeaway then for our listeners from this podcast, and that could be it. Just to touch on quickly, I mean, one of the focus points in financial services, obviously the innovations that have been driven by AI at the moment, particularly generative AI, agentic AI. How does quantum computing fit in with that, and how could these two technologies work together, do you think, to drive the new age of tech? And Subodh, we'll come to you first for that one.
Sure. So I believe one of the most exciting use cases I potentially envisioned for quantum computing is actually AGI. And let me explain what I mean by that. I mean, right now we are all heavily investing in Gen AI. You can just look at the news and hyperscalers, and we are talking about roughly $1 trillion being invested in data centers and GPU technology right now to keep coming up with the next iteration of LLMs and Gen AI models. At the same time, and that's all going on right now. We can see that what's going on with Anthropic and ChatGPT and Gemini and so on. At the same time, all of us who are users of these technologies realize that the marginal value that we are seeing with every successive model is not as much as what the investment is going in. And the path to AGI, artificial general intelligence, which is where human brain-like capability comes in, remains elusive at best. There are two camps. There is a camp right now in the Gen AI community who thinks with enough investments in GPU technology and data centers and energy and all that, we will get to AGI in the next 3 to 5 years. You have prominent figures like Sam Altman and even Jensen Huang to some extent, and many others who are strong proponents of that camp. And then there is a camp out there with people like Yann LeCun and Geoffrey Hinton, and some people who really understand or are considered godfathers of AI, if you will, who are saying the current path we are on is not going to take us to AGI in any time, and they're looking at least a decade from now. And the reasons they cite are the human intelligence is intrinsically an extremely difficult concept for machines to replicate. And the current path of just adding more and more computing capacity and energy and everything is not going to take us there. Therein lies, I think, an exciting opportunity, and some work has already started from companies like Google. If anyone understands AI and quantum computing, I would say Google is one of the companies playing in both camps in a very active manner. And they published a very exciting paper a few months ago, and then those results have been replicated since then by CERN in France. And essentially what that paper shows is that the path to AGI may be much easier, much cheaper, much better with quantum computing than just GPU technology on its own. Now, it's still not peer-reviewed, and I expect Google to publish that paper in a peer-reviewed journal soon. But the fact that CERN has replicated those results, and both teams are excellent technical teams, so I'm pretty sure those results will be replicable. We'll do our part to replicate those results as soon as possible as well. But that, I think, is a very exciting potential application for quantum computing. Can we get to AGI in a much more elegant manner than this brute force, let's throw $1 trillion or $2 trillion. If quantum computing enables a much more elegant, cheaper, faster path, that would be the most exciting application in my view. And early results are showing promise. Still a long way to go, but I'm pretty excited about what the potential with quantum computing on top of AI would be. And the thing in simplest words, the reason it seems to be working that way is because of the randomness that a quantum computer brings. Intrinsically, our classical computing, it's very difficult for us to create randomness with classical computing. And quantum computing, the fundamental way it works, you bring in the randomness element. And that randomness element may be closer to the human brain, as I mentioned, than anything else we can do with machines. So pretty exciting potential for AI and quantum computing to coexist and come up with some exciting results.
Yeah, so I think it's long been acknowledged, really, there's an opportunity here to augment AI with quantum solutions. But that's the potential in a sense. As Sylvia was saying, I think if there's an opportunity here to speed up processes, to compute more energy efficiently, to put forward more elegant solutions, I think that's the real advantage. And I think there is an opportunity here to apply quantum speed up to generative AI, for example. Again, potentially looking at pre-processing of training data and training large language models more efficiently, potentially. But there's also the opportunity to incorporate quantum algorithms into the workflow as well for generative AI. And I think equally looking at AI agents as well, and the management of multiple agents and the respective workflows. So there are lots of opportunities where we could see quantum being introduced either in the algorithmic form or looking at the introduction of submodules, and really harnessing the capability that quantum can offer in terms of looking at complex decision making or pattern matching or spotting anomalies in data and so on. So there's a big opportunity here in order to hybridize quantum with AI. And I think in the reverse direction, there's an opportunity to apply AI to quantum. So there are workflows that we use in quantum right now for which it may be beneficial to incorporate AI into the workflow. So I see these two aspects as being mutually reinforcing.
Sounds great. I feel like we could talk for another hour on this topic, but I know you're both busy men, so you've got jobs to go back to. So to finish off, what advice would you give to banks and financial services firms that are looking to innovate with quantum computing? And what would you say are the next steps required in the short term to ensure we're ready for that quantum revolution? Then Subodh, I'll come to you first.
Sure. If there's one thing to take from my standpoint, it would be that be aware, be cognizant of the fact that quantum computing is going to happen. It's not a question of if, it's a question of when now. We could debate about the when, but as I mentioned earlier, in 3 to 4 years, my view is that quantum computers will coexist in data centers with classical computers, and you will be able to do some very exciting things with quantum computing in the space of financial industry. We talked about the various different applications, but some really potentially exciting things can be done. Again, timeline may change a little bit here or there, but if you are in the financial industry and if you are looking at technology trends, definitely you should be looking at what quantum computing is right now, what you could do, how you could take advantage of it and improve your businesses.
Yeah, so I would advise firms really understanding what quantum computing can mean for them. And to a certain level, that does require an understanding of the technology, but also an understanding of its potential applications and capabilities. And also looking quite carefully at the roadmap for development of quantum computing, because I think that indicates the timings for when to take action and when to engage. The other thing I would say is carefully look at the skills that you need, both within your organization and those skills that you need to access outside of your organization, and prepare accordingly. And also I would say that quite often organizations that we see engaging on quantum computing tend to fit into two different camps, and it's a spectrum. So there are those that want to engage and can engage at the R&D level, and those that are interested in purchasing enterprise level solutions at the relevant point. And as I say, it's a spectrum, and there may well be some organizations that want to engage in both. And I think it's a case of then preparing structurally. So to understand, okay, how can we best harness the opportunities and benefits that quantum computing represents? And as we touched on, what does it look like in terms of cybersecurity solutions that I may have to implement on the other side? So there are those two sides to the coin. the benefits and opportunities of quantum computing, and also looking at cybersecurity response as well. So that would be the general advice I would give to any organization really looking to engage on quantum computing.
Thanks again, Subodh and Simon, for chatting with us today. To close out the podcast, we have our now infamous FinTech jails. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of, or of course you can advocate to free one of the previously incarcerated terms. So you both get a selection this week. Subodh, what would your choice be?
To jail, the word I would have chosen quantum supremacy. That gets overused in the industry. Everyone talks about quantum supremacy and so on. So I would jail that word.
Excellent. Sounds good. We can certainly throw a quantum supremacy into the jail for you this week then, Subodh. And Simon, what would your choice be?
Yeah, so I completely agree with Subodh on quantum supremacy. I think it's falling out of fashion, but, we really should make sure it does depart completely from the lexicon, I think. For me, I'd probably free use cases from the jail, because I consistently use that day to day. And I think if it were in the jail, I'd really struggle to find an alternative.
No worries. Sounds good. We can free that one for you this week then as well. So there we have it for this week. Use cases is coming out of the jail and quantum supremacy is being added into the jail. And it seems like you're both in agreement that this is one we should definitely be casting away as well. So if anyone looks to break that one back out again, I will surely send them your way to debate on that one. But for now, Subodh, Simon, thank you so much again for joining us for the podcast today. It's been a pleasure.
Thank you.
Thank you so much.
Well, that's all we have time for this week. Thanks, of course, to Subodh and Simon for joining me. As for FinTech Futures, you can find us online at fintechfutures.com. And be sure to follow us on LinkedIn to keep up with the latest FinTech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.